So it's December 2022, and what's going on with the housing market? So the big thing is interest rates. Have they come down a little bit? Yes, they have. The big misconception that a lot of people think is that interest rates are tied directly into the Fed funds rate. So I'll give you an example. The Feds raised the Fed funds rate yesterday by 50 basis points or half a percent. And actually, the interest rates dropped a little bit today because they're tied to the 10-year Treasury note. So you saw the 10-year Treasury yield peak out somewhere a few months back, and now it's starting to come down. But what we're seeing is the spread of what banks are charging for their risk on the mortgages was a little bit higher above the yield on the 10-year Treasury. That is starting to shrink a little bit as well. They're feeling a little bit safer, confident, and that will come into play again as things progress through the market. So one of the big things that we're looking through is, what does the Fed raising the Fed funds rate do to the overall economy? Is it going to cause a recession? My opinion, most likely. So there was Barry Habib had put out from MBS Highway, because we see a slowdown and we see the inflation comparison start to become more and more favorable. You'll start to see that inflation numbers move lower, 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 and as a result, mortgage rates should move similarly on a downward trajectory, probably giving us around 5%, below 5% within the next 6 months. I don't know if we're going to get that low, but I wouldn't be surprised that we're going to continue to see some interest rates drop out there. And as unfortunately, that will probably mean that we've hit the recession. The demand has cooled a little bit. But I think being in Metro New York, we still have a strong demand. There's not enough inventory. They're not building 500-unit subdivisions, in the area. So I think that's keeping a floor underneath us. And we'll talk a little bit more about some of that supply stuff coming on for 2023. One of the things that I want you to be aware of is, don't get caught in all the headlines that you see online, on YouTube, on the news, that housing prices are down and mortgage starts are down and mortgage applications and this and that. It's relative to where we were from a year ago, most likely. And you're right, we're not doing as many mortgages. We're not doing as many sales as we were at the peak in 2021. But that's okay. That was a little artificial. It was a little bit of a boom. So don't be scared about that. If you have some questions, come give me a call, shoot me an email. We'll take a look at those things. But don't get dialed into so much of what you're hearing on the news, okay? One of the big things that we're seeing as with housing prices and what the equity growth and things going on in the market is mortgage debt to income ratios near historic lows. We're almost at the bottom of where we were for mortgage debt to income ratios, which means that the amount of money that people are borrowing compared to their overall income is not that bad. And that's a great sign. That means a healthier economy. That means if we hit a recession, we don't see a boom. We're seeing some recessionary factors. And as we've talked about, a recession doesn't mean home prices decline. So Marina Walsh, VP of Industry Analyst, MBA, she put out, for the second quarter in a row, the mortgage delinquency rate fell to its lowest level since MBA's survey began in 1879, declining to 3.45%. Foreclosure starts and loans in the process of foreclosure also dropped in the third quarter to levels further below the historical averages. Are we up from a year or two ago? Yes, because there was moratoriums and you couldn't do them at all. So you're going to see that. You're going to see those headlines again. Don't get scared by that. Where are mortgage rates going? The average coming out from all the different big Fannie Mac, Freddie Mae, MBA, NAR is probably an average that you're looking at about 6.5 coming into Q1, and then by the end of Q4 of 2023, you're seeing about 6%. We'll see where that goes. Okay. One of the big things that we talked about with your supply is a lot of people that have refinanced their home. I think I saw a note that 64% of homeowners have a less than 3% interest rate on their mortgage. A lot of those homeowners are not going to be coming on the market unless they have a need to. So I think that it's a realistic thing that we're going to see some less inventory come on in 2023. You've heard me talk about this, that Goldman Sachs had projected for 2023 that it would be about 4.2 million, where the average in the industry is about 5.2 to 5.4 right now in 2022. So Lauren Chun, she's chief economist in NAR, said the upcoming month should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. Absolutely true. We're seeing this. People are feeling more comfortable. When there's uncertainty in the market, people step back and they say, I want to see what's going on. The reality of it is that right now we kind of have an idea. We don't know what tomorrow brings, but we know where we sit today. So where are prices going as that kind of happens? We're seeing some projections being up, some projections are being down. My personal opinion, as you're seeing good properties that are renovated, good areas, don't back a highway, they're seeing a little bit of an upward trajectory of 5 to 10%, what we'll see at the end of 2023. On the reverse side, homes that need a lot of work, that back a highway, small rooms, not enough property, whatever the case, they may see a 5 to 10% decline. And averaging out, you'll probably see somewhere flat. I think the average for 2023 is about 0.4 in the US. I think we'll probably be a little bit better than that, but we're not going to see the 5 to 10% growth, that we saw during the boom through COVID, which honestly I think gives us a healthier environment. So, knock on wood, hopefully everything kind of goes through and we're seeing some good things. Right now, we're seeing a stable market. We are still seeing some highest and best. We are seeing good demand. People can afford to buy properties. If you're looking around, it's a little bit better. You're not fighting with 20 people. Still fighting with maybe 1 or 2 sometimes, but it's an overall better housing market. So if you have any questions, feel free to reach out, call, text, email. Happy to check in. And if I don't talk to you before, have a happy and healthy holiday to you and your family.